Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Interesting developments on Wall Street and on Main Street. Stocks are surging today after Trump indicates he's flexible about ending the war, and it doesn't necessarily have to have a reopening of the Strait of Hormuz. Some nasty rhetoric coming out from him, but I think Wall Street will find that positive. Some headlines to work with today. Warren Buffett says he's still making investments for Berkshire Hathaway. He talks about one of them that he would like to buy again. I'll talk about that today. Virgin Galactic stock is soaring, ticker symbol SPCE. They're saying they're booking space tourism trips at $750,000 a piece now, raising the price. Bitcoin's on the brink of its longest losing streak on record, as far as months go. Amazon is inking a satellite internet deal with Delta in a major win over Elon Musk's SpaceX, just as everyone's starting to talk about SpaceX IPO. I don't know. That IPO, 30% is going to be allocated to retail investors is a bad sign to me. They're looking for capital. They just acquired XAI, and Elon Musk has lost all the founders of XAI, probably because they got stock in SpaceX, and it was granted to them, so they no longer have to stick around. Elon Musk says we have to tear down XAI and rebuild it because it's just not good enough. It's a lot of money down the toilet. Gasoline in the United States tops $4 for the first time since 2022. Meta is going to limit PG-13 rating use for teen accounts in the Motion Picture Association deal. That's funny. Meta is having to respond to two court rulings that they lost. Court rulings on a state level can be very problematic for companies. Court rulings don't necessarily go that way on the federal level. The next case for Meta is on a federal level. The S&P 500 is up 1.3% this morning. The Dow Jones Industrial Average up 1%. The NASDAQ up 1.8%. The Russell 2000 up 2%. If we're going on the original timeline, this war should have about 10 days left. And then the markets can get back to being the markets. Commodity prices won't fall as fast as they rose. And damage will have been done to our economy already. Gasoline prices have sapped about $10 billion of spending out of consumers in the United States. Gold's up for another day, seeing it up 2% at $46.48 an ounce. The VIX is right around that crazy volatile level of 27. Panic is around 40. 10-year Treasury sits at 4.3%. Art Hogan, chief market strategist at B. Riley Wealth Management, and just he's someone I adore over the last 30 years of following him. He said that the recent market pullback may reflect a typical market reset rather than anything out of the ordinary. He doesn't think a 10% correction is any big deal. There's a couple of narratives going on, but I think long-term investors should keep in mind that 10% corrections are normal. They happen all the time. On average, every 2 years, we have a 10% correction. It's also important for investors to understand that the volatility in equities is the price you pay for the higher, longer-term returns. We've had a smattering of positive days when there's some whiffs of good news. Trump is reportedly willing to end the Iran war is the big political headline of the day. But the oil markets are still seeing movements higher. Crude oil is at $104 a barrel. Brent crude's at $107. There's a lot of different types of oil markets. Brent, WTI, Brent international oil prices. S&P 500's down 7.8% in March. So going back to Art Hogan, I think he's a really smart guy. And he's talking about a lot of narratives going on. On average, every 2 years, we have a 10% correction. 10% corrections are normal. It's also important for investors to understand that the volatility in equities is the price you pay. I love all this stuff. And it motivates me to I have cash sitting on the sidelines. It motivates me to start putting some of it to work soon. And I can't tell you the specifics because that's illegal. It's called front running. But soon. Yesterday, there was a seeming attempt by President Trump to placate the markets with the idea that the deal to end the war could be reached soon. We can't get any admission out of that from Iran. Then he says it could end soon, or the U.S. could blow up and completely obliterate a lot of important infrastructure if the Iran deal is not reached. They seem to be calling his bluff, making him do it because it'd be wildly unpopular in the United States and hurt his party's chances of re-election. Market participants must feel that a president is forcing the hand of other countries to get involved in opening the strait, given their reliance on energy imports. He's sending out a bluster of Truth Social posts today that he's saying, the United Kingdom, Italy, we will never be there for you again. They've refused to get involved in the decapitation of Iran. I have a suggestion for you. Number one, buy from the United States. We have plenty of oil. Number two, build up some delayed courage. Go to the strait and just take it. Some of these texts are just wild. I grew up in a military family, and there was a lot of respect for that office. So there's some reservations right now about what the next move will be, diplomatic, military, or strategically trying to open up the shipping lanes. The stock market is oversold on a short-term basis. The headline material suggests the United States is traveling towards an off-ramp is enough to prompt some short covering activity and some speculation wrapped up in the thought of not wanting to miss a rebound effort. We're having a good day. Tomorrow will depend on the price of oil and the texts that come out of Truth Social, I believe. There's some really big news today that I want to get to. Marvel shares are surging 10% after inking a strategic partnership with NVIDIA. The alliance will help custom processors designed by Marvel connect with NVIDIA's networking technology. It also sends $10 billion into Marvel. NVIDIA has a track record of doing this now. In essence, NVIDIA is ready for the world to have data centers that are composed of a mix of its GPUs as well as custom chips, making sure those custom chips integrate well with its AI infrastructure platform. That's going to help maximize the dollars it receives for every gigawatt of data center capacity deployed. NVIDIA is being positioned as vertically integrated, which means they offer all solutions you need, not just GPUs, and also horizontally, which means they're willing to integrate their offerings into what your technology stack happens to be. This news is so big that you're seeing companies like CoreWeave up 6% today, Cipher Digital up fractionally, Applied Digital up 6.6%. The chip designer's most recent strategic investment was in NeoCloud, Nebius. They're up 4.7%. That was a $2 billion deal as well. The other big news, I think, today that we have to hit, is we talked about it yesterday, is Spice King McCormick is expanding its reach in spreads and condiments, announcing a $45 billion deal to buy Unilever's food business. That business includes things like Hellmann's mayonnaise. Not a lot of organic growth at McCormick, but it's a big acquisition. I don't much care for it. The margins should be better at McCormick because Americans love spicy food. TD Cowen cut its price target on Procter & Gamble from 156 to 142. Procter & Gamble, Kimberly-Clark, and Clorox. How will they absorb the cost of higher oil on their businesses is a big question. Oppenheimer predicted good things for Alphabet. They said in a note that Google search is going to be the most durable advertising business in the face of any consumer spending slowdown due to high gas prices. Google Cloud has continued upside. I think it looks great at these prices. Now, a call on Google and the cloud and NVIDIA invites even more tech talk this morning. Memory stocks are rising. Bernstein analysts called the recent panic over Google's Turbo Quant AI algorithm overdone. I've done some research on it, and it will actually benefit the AI sector. In large part, it'll bring down the cost of large language models, but the memory will still be needed. If it brings down the cost, more institutions will deploy, and as more institutions deploy, more memory will be needed. Bernstein agreed with me saying that they should have zero impact on HDD demand and negligible impact on NAND memory demand. Given the stock sell-off, we see this as an attractive entry point for Seagate Technologies, ticker symbol STX, Western Digital, ticker symbol WDC, SanDisk, ticker symbol SNDK, as well as Micron, ticker symbol MU. Wells Fargo cut its price target on Ford. Beep, beep. Price target gets cut from 11 to 10. That stock is tradable on some levels. I just don't see owning it. It does seem to hold, low single digit or high single digits to mid-teens. That's a percentage, pretty good trade. But Wells Fargo maintained their sell rating on General Motors as well as Stellantis. Those are the big three from Detroit. The Iran war fallout has crushed these stocks, raising costs for raw materials, freight, and energy. Their guidance is likely to come down as they report earnings. Loop Capital started coverage of some payment stocks. I own Visa and MasterCard for the long term. But Loop Capital started coverage with Visa, MasterCard, and Block with buy ratings. They put hold ratings on Toast and PayPal. Block has come back powerfully after massive layoff announcements. Loop sees fundamental drivers of top-line growth. GE Vernova is in the news today. I know that's a stock a lot of you own. I know that because when I do a Pints and Portfolio, I say bring your portfolio and I'll take a look. And GE Vernova pops up in a lot of portfolios, which is good for you. Wells Fargo raised its price target to 896 from 831. The analyst at Wells Fargo views the stock as a buy. They expect continued strong gas turbine bookings and positive pricing remarks. Everyone who's building a data center wants their sold-out turbines. Vertiv, also in this industry, similar. They've been downgraded to hold from buy. Jefferies assumed coverage of Vertiv and basically throw that hold on the stock. They're raising their 2027 organic growth to 18%. The street is already at 23% with elevated out-year margin expectations. That includes Vertiv reaching its long-term target a year early. They see pressure to Vertiv's record valuation over the near term as hyperscaler CapEx growth slows in 2027. Morgan Stanley talked a little bit about NVIDIA, saying we see the healthcare industry jumping in. Not as big as the hyperscalers, but we see the healthcare industry adding to what NVIDIA can sell in the future. Back to Loop Capital on Visa, because this is one that I've owned for 20 years. Loop Capital started coverage of Visa at a buy price target of 387. Visa's PE multiple has been impacted by many factors, while earnings per share growth has been better than expected. Investors have been pricing in a slowdown in revenue growth across the payment space, as well as competition worries. Right now, their earnings expectations at Loop Capital are above consensus expectations for 2026 and 2027. Visa could also see upside related to foreign currencies revenue returning, boosting yields. The diversity of Visa's revenue, accompanied by the long runway for value-added services penetration of total revenue, gives them confidence in the longevity of Visa's net revenue growth strategy and likely low to mid-teens adjusted earnings per share growth. That's pretty good. ServiceNow got a price target jump at Wells Fargo. ServiceNow got a price target cut. Some of the cuts are coming in for software names. Wells Fargo cuts their price target from 225 down to 185. Software stocks, AI disruption fears, software as a service apocalypse. Analysts are still bullish on the stocks because that price target implies nearly 80% upside from yesterday's close. Wow. Fannie Mae and Freddie Mac had massive days yesterday. Fannie Mae up 50%. Freddie Mac up 47%. Two influential analysts have said that these stocks could be 10 baggers. Now, that's a big claim. You got to understand when you're a $5 stock, it's worth noting that a 10 baggers, pretty nice number. 10 baggers was a phrase that I heard a lot in the industry 25 years ago, but not so much these days. Ackman calls shares stupidly cheap with 10 times upside to the mid-40s. Burry confirmed buying on the way down from $6 and $7 down to the $4 levels. Oh, Burry, Michael Burry. He's the big short guy. Burry responded directly to Ackman's post, writing that it was rare to see this kind of a setup in the current market. Both men agree that the thesis is real. Burry tempered some near-term expectations, writing the Iran war and higher rates have pushed any IPO to 2027 at the earliest. Retail holders of Fannie Mae and Freddie Mac, ticker symbol FNMA and FMCC, are buying a policy trade, not a business one. These two mortgage giants are government-run companies. They don't originate loans. They just underpin them, buying mortgage-backed securities from banks and lenders to sell to investors. Seats are starting to fill up because it's about 2.5 weeks away. Pints and Portfolios, Saturday, April 18th, 11:30 to 1:30, Sunnyvale, California. It's a good opportunity to come meet me and a couple of financial planners. It's ideal if you're 50 plus. Been a fan of the show for a while. It's very informal, but you can bring your questions. And afterwards, we'll give a very formal review of where you stand in what's called a preliminary plan, which runs a Monte Carlo scenario on your assets. While we're collecting some information on your assets to put into the software, we'll throw out some questions at you to see if what you're doing right and what you're doing wrong. This is invaluable. You can sign up for the event at robblackshow.com. That's robblackshow.com. We'll take a break here. We'll be right back with another big segment.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
I'm back, and the market's holding the gains, not really adding much to them, maybe going sideways. Oil prices haven't come down today, and that may be a situation where people start, as the day goes on, as we get towards closing bell, maybe there'll be some sellers. Again, I think in about 14 days, there's large expectations for the war to be over. Will the objectives be won or not? And there's a big question of if we put boots on the ground, that's probably going to cause a big pullback in the market. That's when American soldiers are in direct line of fire and potential bringing home people in coffins. Not good. I guess they'd bring them home in bags and put them in coffins later, but you get the idea of where I'm going at with this. So Trump is hinting that he'd be willing to leave Iran without taking the Strait of Hormuz, telling Europe, hey, you take care of the problem because that oil's coming to you, as well as Asia. We have enough in the United States. In fact, we'll send you some if you want. Just pay us. And the problem here is we still need Europe for a lot of goods that they create for us and send to us. We still need Asia for a lot of goods that they create and send to us. And those goods are manufactured using oil. So I don't know what's going on in Trump's mind. Is he getting bored? Is he accomplishing his goals? Is he starting to think about the midterm elections coming up? He probably doesn't want to lose control of Congress. In large part, Congress will start fighting back on some of his administration's goals. The pace of hiring just fell to the lowest level since 2011, outside of the pandemic. Obviously, the pandemic really slowed the pace of hiring down. U.S. businesses are adding workers at the weakest pace in 15 years. Hires as a percentage of total employment dropped to just 3.1% at the end of February. That's the lowest rate since April 2020. Before that, back to 2011. This is concerning, given the ongoing impacts of the conflict in Iran. The lowest hires rate on record is not a good headline to be talking about. I like creating lists because it gives me talking points in life, but it also gives me talking points on the show. And there's a lot of headwinds out there, especially with the price of oil. Some of these dynamics may ultimately prove fleeting, temporary, or more cyclical in nature. There's the macroeconomic or the geopolitically derived factors. There's other factors like demographic inflections, powers of shifts in the value chain. Packaged good companies are starting to stare into the abyss of big challenges. So packaged goods, names like Coca-Cola, Procter & Gamble, Colgate-Palmolive, Church & Dwight, General Mills, Campbell Soup. There's a lot going on, like GLP-1 drugs, where a seismic demand shock that reduces calorie intake. The supply chain, macro and geopolitical unpredictability creates volatility and adds costs. There's health wellness for these guys, forces that are risking reformulations on legacy brands. Now, a major challenge in incremental costs for legacy heavily processed portfolios and food. This administration has been anti-processed food, which I think I agree with. That's great. If you could afford to eat healthy, please do. But a lot of people have to consume calories, and they're not the healthiest, but they are the cheapest. So even things like changes in SNAP, where there's a benefits cliff that creates demand volatility, not a structural threat, but an added headwind for the center of the store categories, a manageable variable for most in isolation. Let's move back into some of the top stories of the day. What I was trying to get at with that was I like lists. There was a big chocolate heist. This is funny. This is meant to relax you a little bit before we get into more serious stuff. 413,000 Kit Kats, 12 tons of candy were stolen during transit from Italy to Poland, according to Nestle. The candy and the truck carrying it have yet to be found. Stolen bars could be trackable by their batch codes on the wrappers. So, I think Nestle Kit Kats make a break for it is one of their catch lines. I do love Kit Kats, but only during Halloween time. There's a new Silicon Valley startup called Enter Renew. So Energy Renew. It's a robot. It can wheel itself to an EV and charge it with a robotic arm. Drivers can use an app to summon the bot to wherever the car is, as opposed to seeking out charging stations and remaining with their vehicle while it juices up. Venues could offer EV charging without building charging infrastructure. Think of it as maybe a mall that wants to get you to go shopping. They have these. You go in, you get your car charged up, you buy goods at their mall. Tenants are happy. Mall owner is thrilled with the investment. Whether they give you 100% comp, 50% comp, 50 miles for free, I don't know. It's a fun idea, but it's very limited. Warren Buffett says that he sold Apple too soon and would buy more, although maybe not in this current market. He talked to Becky Quick, who used to work for the Wall Street Journal before she got to CNBC. And when she was at the Wall Street Journal, she was a nerdy girl. I mean, you know what I'm saying? Like media nerdy, where she had the glasses and she looked like she just got out of college and maybe a ponytail, just gearing for getting into media. She did a great job, and she's done great at CNBC. Warren Buffett's been fond of her interviewing style, and he's still doing interviews with her. Warren Buffett said he sold Apple too soon, would buy more of it, not in the current market. Apple remains Berkshire Hathaway's largest holding, even after the conglomerate trimmed its stake to $61.9 billion at the end of last year. Buffett said yesterday that he would continue to add to the position if it gets cheaper. He said the iPhone maker is not yet attractive even after falling more than 14% from its recent highs, dropping more than 6% this month. That's amid turmoil in the stock market due to the Iran war. He said he's very happy to have it be our largest holding. I was not happy to have it be as large as almost everything else combined. It's not impossible that Apple would get to a price where we would buy a lot of it. Buffett said the firm has made more than $100 billion in the Apple stock. He's favorable of Tim Cook's leadership and the firm over Steve Jobs, what he's done. He actually took a shot at Steve Jobs and said Tim Cook has done better at the wheel than Steve Jobs couldn't have done what Tim Cook did. That's big praise. Now, speaking of praise, this works well. Warren Buffett's teaming up with NBA superstar Steph Curry for a charity lunch, reviving his iconic auction for the Glide Foundation. He's 95 years old. He's one of my heroes. He's going to be joined by Steph and Aisha Curry. Online bidding for the lunch will open up on May 7th on eBay. It's worth note that that's big money. He's raised over $50 million for Glide Foundation, which feeds people and I think houses them. Good for him. The bidding is much too high for me, but you get to bring 7 guests to Omaha. And it's going to pull in probably $20 million plus this time. Gas prices are in California $5.89. In Napa, California, they're $6. In the United States, the average is $4. A month ago, it was $3. Prices are rising with a shift to more expensive summer blend gasoline, which cuts down on pollution or something like that. This hurts lower income households the most who have to drive to work. So it hurts bad. There's something called sports tourism. Oh, for the record, what was the auction last year? It went for $19 million. A few years before that, $4.5 million to Justin Sun. Overall, $53 million. It's good to be charitable. I don't know if that qualifies as a write-off if you bid $20 million on it and win. This is fun music tourism, fueled by icons like Taylor Swift and BTS in other countries, drove billions. We did that story last year. Scratched upon an idea called sports tourism. It's $1 trillion, almost $1 trillion worldwide right now per year. Sports fans are the best fans for tourism because they spend 45% more per day. They tend to live large and buy things like jerseys that are expensive and creates tax revenue. California is leading the United States in the golden age of sports tourism. This year, we put on the Super Bowl in the Bay Area. We put on the NBA All-Star Game last month. We're going to put on games for the FIFA World Cup in LA and the Bay Area. I don't know if San Diego gets any, but I don't think so. But maybe. The Super Bowl again next year is going to be in LA versus the Bay Area. The Olympics in 2028. The most recent Super Bowl, they say, brought in $500 million to the Bay. One of the hidden benefits of the sports boom is the infrastructure acceleration. So you have to improve the airports. You have to improve the roads and the transit systems. And they all come on deadlines. So I was talking about how gasoline prices hurt low-income consumers. With the stock market down 8% in the month of March, roughly, that hurts high earners. It's kind of a double whammy to our economy right now. Bank of America talked about credit card and debit card spending. Since the start of the war, lower income households' annual spending growth rate, excluding gasoline, slowed as higher energy prices took their toll. Higher income households' rate was largely stable. Wealthier people are still spending, but the stance of the wealthy on the economy is weakening. Consumer sentiment fell more than 3 points to 53.3 in March. The decline was more pronounced in the higher income cohort. Joanne Hazoo said that consumers with stock wealth were buffeted by both escalating gas prices and volatile financial markets in the wake of the Iran conflict, leading to a bigger sentiment declines. A month and a half ago, I was looking at my portfolio every day and just snickering, all-time high, all-time high, all-time high. And now I'm afraid to look at it. I will. Today we're having a good day. With upper income consumers disproportionately propping up U.S. consumer spending in recent years, the biggest risk to the economy right now is for the stock market to go down another 10% and be in a 20% bear market. There's a wait and see kind of approach right now, but we're waiting and seeing on Donald Trump and what he ultimately does with the Iran war, because there are no allies here. It's just the United States and Israel against Iran. Maybe some Gulf states in the Middle East are starting to punch back. Tech stocks look cheap, but some are going to be a value trap. Be careful on jumping. There's a guy who's on CNBC all the time and Bloomberg. His name's Adam Parker. He works with Trivariate Research. He wrote that investors should avoid cheap and slow-growing stocks within the industry. They're like a value trap. He advises investors to consider the more expensive ones. That's interesting. The State Street Technology Select Sector Spider Exchange-Traded Fund is down 14% from its late October record high, worse than the S&P 500's 8% drop. That tech drop really started aggressively again when Anthropic issued a new update to Claude, and business-to-business software products got smashed. Semiconductor stocks, though, have also dropped as traders take profit after years of strong performance and questions about peak profitability, peak revenue. I think peak revenue for the AI trade is sometimes in 2027. There'll be a reset of some of the tech stocks that you know and love. Maybe this current stock market correction is getting you there, per se. Or letting some of the air out before a lot of air comes out. And then next time air comes out, it won't be as much. The S&P 500 trades below 19.9 times value. This is rare. Tech usually trades expensively versus the market because of its higher expected earnings. So tech trades at 19.4. The S&P 500 trades at 19.9. Now, again, the S&P 500 is very market weighted, heavy on tech stocks. But Adam Parker said cybersecurity stocks like Palo Alto Networks, CrowdStrike, and Cloudflare all trade at some of the highest PE multiples in software. They're still cheaper versus their peaks, and they're all up a touch in the past month as investors are starting to nibble. He talked about Adobe, Salesforce, and HubSpot. They all trade at some of the lowest PEs in software, and they have all seen their stocks drop in the past month. The strategy here would be to buy the former three, Palo Alto Networks, CrowdStrike, and Cloudflare, the cybersecurity providers, and avoid the latter three, Adobe, Salesforce, and HubSpot. I like Adam Parker a lot. He's a smart guy. He does great interviews, quick interviews, soundbite interviews. I don't own any of those individual names, by the way. He talked about Micron's blowout earnings release in late March. Couldn't keep the stock from tumbling afterwards. Talking about demand for memory as companies build their AI data centers. So the good news is that moving the names much higher because of growing concerns about the eventual excess capacity, and they too will have that. Micron's going out and building 5 new factories, and when AI goes from peak revenue, but AI's got some aces up their sleeves, like healthcare spending, like moving from large language models into enterprise companies. He talked about the chip makers, NVIDIA, Advanced Micro Devices, and Broadcom, which analysts, he said his analysts that he works with have pitched. These 3 provide AI chips for data centers and are still expected to grow for years to come. They all trade between 19 and 25 times earnings, whereas they often trade at more than 10 points above the S&P 500, like 30 times earnings. I'm going to take a break here, come back with one more tech-heavy segment for you, and then start prepping for my afternoon show. Stay tuned. Don't forget, I have a huge event coming up. Pints and Portfolio, Saturday, April 18th, 11:30 to 1:30. I'll buy the beer. You come, be informal and cool, and let's talk financial planning and wealth accumulation, as well as retirement planning. I'll be right back.
You are listening to the Rob Black Show podcast. For more information on EP Wealth, visit robblack.com. That's robblack.com.
This is the segment where I often dedicate a lot of time to tech talk. Let's jump into what I'm seeing out there right now. Sam Altman's internal Slack messages about the Anthropic Pentagon drama recently implied he tried to save Anthropic. I don't believe that for 1 second. Obviously, Anthropic Claude is kicking OpenAI's ChatGPT's butt with paid subscribers. And I think Altman's in panic mode. That's why he shut down Sora, because they're burning cash, like putting it in a barrel and lighting it on fire. Speaking of tech bros and private messages, Elon Musk and Mark Zuckerberg sent text messages back and forth to each other probably last year during the whole Doge time with Elon Musk. And they were friendly. And then I thought to myself, like, weren't they talking about cage fighting 2-3 years ago? That turned around fast into the broship. A billionaire to billionaire. I'm going to have patent pending on that one. Billionaire to billionaire, where billionaires talk to each other. And they kind of sound like this. Doesn't Mark Zuckerberg look like his face got hit with a shovel in a cartoon? It does to me. So the Meta Ray-Ban smart glasses that leaked last week are actually for prescription wearers. Ooh, that's exciting. I still don't have a prescription. I got my eyes done 20 years ago. It was by this Russian doctor. And I didn't particularly take well to the lasers, like burning my eyes. So she had to hold my head in a lockdown, like a choke out. And she's like, you must stay still. Like, I still have bad memories about that. But it improved my eyes, but they instantly started going bad again. So now I squint more. I'm trying not to get readers, because I've heard once you get readers, you go from readers 1 to readers 2 to readers 3 in 3 years. Eli Lilly is doubling down on AI medicine, inking a $2.75 billion deal with generative AI drug maker Insilico Medicine. Insilico already has 28 drugs in process. That's pretty exciting. The final 2 holdouts of XAI's co-founders have reportedly left the company. Don't forget, Elon Musk said XAI's AI model Grok stinks and they have to rebuild it. Of which the XAI is merging with SpaceX. I'm going to give you a reason not to buy SpaceX. And XAI, I'm telling you, I'm walking you through it right now, is that their product stinks. Musk thinks so. Says he has to rebuild it. And has gone as far as to merge the 2 companies. They'll save some resources for sure. There's some overlap, but not a lot. But when all the founders of the original Grok team leave, what's that telling you? They're probably getting a big payday from SpaceX, getting shares. And they probably don't want to be associated with product that stinks. Chick-fil-A. They give a cluck about screen time. They're going to offer rewards to the brave who put their phones away while they dine. That's where we are as a society. Chick-fil-A is offering free ice cream to families who agree to put their phones away during their meal as part of an effort to encourage more face-to-face time and less screen use at the tables. I don't know. I guess that's a good thing. If Chick-fil-A ever comes public, I'm in. Holy mackerel. People think of that as almost a religion. There's the Catholics, there's the Protestants, the atheists, and the Chick-fil-A'ers. That sound about right? I know I'm not making fun of any religion there, just FYI. That ain't my thing. What else do we have to hit in this tech talk segment? Let's get into it. iHerb ships vitamins, supplements, and other wellness essentials straight to your door. It's one of those ads that showed up in my social media feeds. And I asked my spouse, I'm like, are you getting these? And she goes, I am. Like, never to buy this, right? Because she buys some dumb stuff from advertising. And I'm not knocking the iHerbs. I'm just saying I hate the commercials we're getting. When you watch a little YouTube, you watch a little Instagram videos, and then I just feel like you're getting lower quality advertisements. Bring back the Coca-Cola or Pepsi. Meta Platforms is going to test a premium Instagram subscription tier, exploring new monetization stream with exclusive features, AI tools, and freemium expansion beyond advertising. That's probably the most interesting thing I've said today. A premium Instagram subscription tier. Meta Platforms also saw their price target lowered from $8.25 to $7.75 at Morgan Stanley, but Morgan Stanley made out with the company today. It was a kissing fest. What am I talking about? They're calling it the top pick, even though they cut the price target. Meta slashed 1,500 jobs as part of its pivot away from the metaverse. It added more expenses to an already astronomical outlay for artificial intelligence. Last week, Meta and Alphabet lost a landmark social media addiction trial that I think we're going to see age gating. I don't see how our Congress cannot see this now that we've gotten sworn testimony and a juror saying this is outrageous, that Meta with Instagram and other products and YouTube algorithmic program us with addiction and bad advertisements. Brian Nowak from Morgan Stanley said, I love this stock and want to kiss it. No, he said, let's reiterate it. Meta as an overweight, $775 price target, top pick in his coverage. I don't see any analysts dumping the stock. I've only seen one sell on the stock in the last year on Meta, and it was at an all-time high, so it was a perfect cut down to sell. Meta's core digital advertising business is in strong shape. Morgan Stanley forecasts annual ad revenue of 28% in 2026 and 21% in 2027. They are a wildly profitable company. Meta and ARM Holdings are going to make a first ever data center central processing unit.
I am proud to announce that starting today, our company is now Meta.
They're trying to get their AI agents all that in a bucket of chicken, but so far Meta hasn't really shown much. Their latest large language model, Avocado, was supposed to be here by now, and it's not. Oh, I'm telling you, Claude's off Anthropic. I totally quit on OpenAI. And I know you're saying, like, quit, like, I can't quit you. Like Brokeback Mountain quit? Yeah, I totally quit on OpenAI. I can't quit you. It's one of the best scenes in movie history because it's not what you're expecting that direction to go. Elon Musk confirmed Tesla is making a big investment in Japan. Do you remember the Alphaville song, Big in Japan? Big in Japan. All right. Big in Japan. My son was listening to Alphaville and he was singing it because he had his headphones on in the car and he was doing Forever Young. Forever young, I want to be forever young. I told him, I said, that's funny because, you know what, 40 years ago, 35, 38 years ago, I was in high school and that was our prom theme. And it was one of my favorite bands, Alphaville, because they were MTV friendly and MTV was how I consumed media. There was no Facebook, Instagram, or anything like that. And I said, here's the funny thing, Z. Like my kid's named Z. My dog is named 00101000 because she's binary, but the dog is binary, not she. But I told him, what's a song, Zach, about nuclear bombs? I said, my high school wasn't very smart. You're going to a much better, much smarter high school. It's about nuclear warfare. Alphaville was one of those Western European. West Germany? Yeah, they were a West Germany. Okay, no, they were communists. And somehow they got into the pop market. And it was all about nuclear bombs. And my high school had that as prom. It sounds like a love song. It's not a love song. So if any of your spouses think it's a love song, go break their heart tonight and tell them it's not. Tesla is making a big investment in Japan. I've already said that. Oh, I've got old timer's disease. Many of the parts of Teslas are made in Japan. Panasonic has been our biggest strategic supplier, Elon Musk said, over the past 2 decades. Tesla stock is trying to end a 6-week losing drought. Losers. That's bad. I'm concerned for Tesla in large part. Their comps on EVs are going to look horrible for the next 3 quarters. They're putting a big bet on robo-taxis, which their new self-driving technology is great. I still would prefer to have something with LiDAR in it. And there's a lot of competition coming for robo-taxis and self-driving. NVIDIA chips are going into new data centers and into space. Mistral's AI $830 million funding could potentially lead to $575 million in chip purchases. StarCloud has raised $170 million for space data centers, planning a second satellite with a GPU cluster, 100 times more powerful one than what they've put up there already. ING Global cloud infrastructure spending reached $110 billion in the fourth quarter, growing 29% with 27% growth forecast this year. So NVIDIA is set to benefit from all of this spending. Global spending on cloud infrastructure services reached $110 billion in the fourth quarter of 2025. That spending will grow 27% this year. I don't say this often, but I think you can trade NVIDIA. And that's like a prediction market trade. I don't know if you want it long term. I still own it. But I'm doing something different with mine. I've got a big cluster of it, so I'm doing an option overlay strategy to generate income that's for the percentage of how much I'm holding. It's 7 to 8% on top of the dividend that they pay, as well as any appreciation in the stock. And if it shoots up and blows through my option, I don't mind letting go 3 or 4% a year. Uber and Blacklane announced an agreement for Uber to acquire Blacklane. What does Blacklane do? Give you a second to think about that one. They're a chauffeur service, limousines. So Uber is now going to have a category where if you want to order something super nice, hey baby, I got a limo for our date tonight. Let's go out on prom. Blacklane's luxury service and specialist knowledge, combined with Uber's global scale and technology, will deliver a powerful platform for growth. I think that's a cute acquisition. Palo Alto Networks was up 6% today after the CEO bought shares, put in his money where his mouth is. Sharply higher. CEO purchased approximately $10 million of shares. That's a notable vote of confidence and suggests he likely sees value at these low levels. Cybersecurity stocks are also broadly higher today, with CrowdStrike up, Okta, Zscaler, Fortinet, and Checkpoint, as well as SentinelOne. I think there's going to be some acquisitions, and that'll mark a bottom. You can always find me online, and I'd like you to. You can always come to an event. And again, I would like you to. I'm online at robblackshow.com, and my next event is coming up next month. Don't have many days left in this month, but so about 2 or 3 weeks roughly. Sunnyvale, California, April 18th, 11:30 to 1:30, Saturday. Sign up for the Pints and Portfolio at robblackshow.com. I'll buy the beer.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.